Sunday, April 26, 2020, Maneco 64, home of alternative economics and contrarian views. I wasn't planning to do a video today. I am doing, of course, my live stream at 9 p.m. London time. But I was looking at a few things, and I saw a tweet that I made in November last year about the Brazilian real. Of course, I was born in Brazil, as some of you might know. I grew up in Brazil. I haven't lived there for many years, since the 80s. But I do follow the currency once in a while, the Brazilian real. And this video basically is not really to talk about what I think about the real or where it's going to go from now, but it is to prove to you that technical analysis does work. Of course, it doesn't work all the time. It's not an exact science, but if you apply the laws of probability, there is a good chance that you could succeed in benefiting financially from using technical analysis. So let's look at what I tweeted out. And actually, I also put a screenshot of that tweet on Instagram. And I have a few friends from Brazil still on Instagram. So that's what I put out. It says the world's ninth biggest economy's currency looks set for a rocky ride, USD BRL. Looks like a teacup formation breakout for the dollar, which means the Brazilian real is going down. As it is Brazil, let's call it a coffee cup formation. Long-term objective would be around 5 reals 50 for $1. So there's the chart there. And there's another chart here. This is the one from Twitter, the one that I tweeted out. And we did break out. We were breaking out through that, the top of the teacup. That's the handle there on the right-hand side. The objective is usually from the bottom of the teacup to the top of the teacup. That's how I got the 550. And then one of my friends who actually reacted to this, and we went to school together. He was not in the same class. He's a bit younger than me. We used to play golf a lot though. And he's still in Brazil. He lives in Brazil. He actually moved to the south of Brazil. So he asked me the question, and this is in Portuguese: what is the fundamental reason for this, in your opinion, Mario? And I said, it's difficult to say because it's technical analysis. And then I added, generally, there will be a crisis while the currency declines or the dollar goes up. And lo and behold, we've had the crisis, of course. And I'll show you now where the Brazilian real is. We are at 567. So we've gone through the target of 550. So it doesn't look very good. This is in terms of the dollar, of course. That's the dollar buying more reals. You could turn this chart upside down to see how badly the Brazilian currency is doing. But notice as well, when I first looked at this formation back in November, we broke out, but we actually came back down below it. And then we just started zooming up in the beginning of this year, as you can see. A lot of times in technical analysis, markets do that. They break out, they come back, and then they go back up. But the fact that it does that is very bullish. The fact that it comes back to retest like a key level, like 4 at the time, is very bullish. Of course, if it had gone back down and not done what the formation usually says it should do, then we wouldn't have had this move. Usually with these formations, I would say the probability is like 3 and 4. So pretty high probability, 75%. So there's proof that technical analysis does work. My friend contacted me a few weeks ago and he said that he benefited from that. I think he did buy some dollars. He's out of the dollars now. What do I think is going to happen, even though I said in the beginning of the video that this was just going to be to tell you about the technical analysis? Well, to me, it doesn't look very good. I think the real is going to keep going lower, so we should see the dollar keep going up against the Brazilian currency. And I think for Brazilians that have savings in the local currency, I think it's a bad proposition to keep that currency as savings. Of course, you need that to live day to day, to pay for things, but I wouldn't stay in real. I would actually go to gold. Gold's going to be doing even better than the dollar. I did a video yesterday talking about how all the fiat currencies are sinking and against gold. So here's a chart of the price of gold in Brazilian real. We've almost doubled from 5,000 to 10,000. I think that's going to keep going up. Unfortunately, I think we're going to have very high inflation, if not hyperinflation in Brazil. It will be, Brazil will probably have another currency crisis if this isn't one already. What about gold? Because I was looking at the gold chart, at a monthly chart, and this chart of the dollar price of gold looks fairly similar to the long-term chart of the real versus the dollar. So is it possible that gold does go up and test the all-time high at 1900, and then we consolidate around 1900 and 1700 for a year or so and form a teacup handle? It is, actually. It is very possible. Am I saying I don't think gold is a good place to be in terms of dollars, if you think in dollars? No, not at all. I think eventually the price of gold in dollars, US dollars, is going to do the same thing as the price of dollars in real. It's going to go a lot higher. I could see gold easily going up to 3,000. But to all those out there who think if we break through the all-time high at 1900 that it's going to go straight up, there's a possibility that it might not, that we could consolidate up there and create a teacup handle, and that wouldn't be bearish, but we just have to be more patient and wait maybe a year or a little longer for it to resume its move higher. And then from there, I would say we could go to 3,000 very easily, just like the dollar went up from 4 to almost 6 now against the real. So there you go. Technical analysis is not a perfect science, as I've said many times. I also look at the fundamentals, but a lot of times there are some very good signals from technical analysis, and it's all about the probabilities. Usually these patterns like teacup or flags or wedges, they're called consolidation, and what it means is they're consolidating from the previous trend. So if the previous trend is up for something and then there's a consolidation, it usually resumes, the consolidation ends, and then the trend resumes. And it's 3 out of 4 times that happens. So yeah, there you go. Technical analysis. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Steemit, BitChute, and DTube. I wish you all a great rest of the weekend. Take care. Bye.